The monthly unemployment report came out last Friday. Our friend Brian Battle spent the weekend. He didn't sleep. He didn't eat. He didn't watch 1 minute of the Olympics. He just crushed the numbers. And it's time for our monthly visit with Brian Battle. He's the Director of Trading for Performance Trust Capital Partners. He has the analysis for us. I guess we could start by saying, the unemployment rate went down to 6.6 from 6.7. That's the lowest since October of 2008. Our highest mark recently was 10% October of 2009. But basically, I guess our first question is, Brian, good morning, sir. Are national unemployment numbers even still relevant and worth analyzing nationally? Or do you have to break it down geographically and demographically?
Yeah, well, you're exactly right, John. First things first, I'm not the only one not watching the Olympics. I don't know if you saw the stands, but nobody was there. So, I think you're right. The unemployment rate it's an important number because it has implications that it's a great headline number. Everybody can watch it. And unfortunately, the Federal Reserve Bank, the guys who set interest rates in the country, have sort of tethered their guidance around the national unemployment rate. So you're right. If the unemployment rate isn't that great of a number when you're trying to do economic analysis because it depends where you live and who you are, you're going to experience a very different unemployment rate than whatever the national rate is. But like I said, the problem is the Federal Reserve has tied themselves to saying, we're going to raise rates when unemployment gets to 6.5%, and we're almost there. Now they've cut themselves in a corner.
We're going to get to Jenny Yellen's brand new week at work here in a second, but you're right. Just to illustrate for our listeners, if you want to work as a fast food worker in North Dakota, the rate is 2.6, and they're paying what, Amy?
About $15 to $17 an hour.
Yeah, so there's work out there, but it means picking up and moving sometime, and it might mean changing careers.
Right. So there's exactly the point. Is it's an inexact number to try and paint what's going on with 300 million people across 4 different time zones. So North Dakota, the unemployment rate's 2.6%. Here in Illinois, we're the 49th of the nation at 8.6%. So it just depends where you live. Another demographic, if you're an African American and 16 years or older, the unemployment rate you have is 12.6% nationally. So it's a mixed number, and like I said, unfortunately, we've tied public policy to this number, and it has political and economic ramifications, and it's starting to lose its ability to be helpful.
Brian, I'm looking at this list here. Rhode Island at the bottom, 9.1%. What's up with that?
Well, there's about 10 people that live in Rhode Island, so if one of them lose their job, you're gonna have a rate like that. But that's the statistic will be there's a lot of retirees in Rhode Island. They have a very high tax rate, and the population's very small, so a small change in employment can really change that number.
Brian, let's move on to something that probably is more significant than just the monthly number, and that is the Congressional Budget Office, the report last week that essentially Americans, because of the Affordable Care Act, will work fewer hours, enough to be the equivalent of 2 million fewer jobs by 2017. Republicans say, hey, thank you for that gift. That's what we're going to run on here for November. The Democrats say, no, this gives people an opportunity to actually retire. Where do you come down on this?
Yeah, it's an amazing week for employment news. The unemployment number is Friday, and then the CBO report came out and said the equivalent of 2 million fewer jobs because the Affordable Care Act will cause people to work part-time. Really what that means is employers will hire more part-time people instead of more full-time people, so then they don't have to give them health care. So a great marketing campaign for the Republican Party. And I was insulted. Jay Carney, who's the spokesman for the White House, said, because people will have more part-time jobs, it gives them a choice to spend more time with their family. And that's just insulting that people will choose, because their employers give them fewer hours, they'll choose to make lifestyle changes. So they're trying to make lemonade out of lemons, and the important thing to know is that the CBO, the Congressional Budget Office, is deemed as the impartial measurer of these sort of things that are economic, and this number is 3 times worse than what they expected the first time they measured it. So a policy that's going to have a definite negative effect on how people are employed in the country.
That voice and expertise belongs to Brian Battle, Director of Trading for Performance Trust Capital Partners, joining John and Amy on our Turnkey.pro answer line.
So, Brian, what's important about this week? I know that the new Federal Reserve Chairman, Janet Yellen, is going to be giving her first congressional testimony as chairman. What are people going to be listening for?
Well, you're right. Janet Yellen was just nominated, or was just sworn in at the end of the month, end of January. And the thing to remember is that the Federal Reserve has two jobs. Congress made them do two things. The first is has to be a stable value of money, which you can argue whether they're doing that or not. But the other job that they have is they're mandated to create the conditions for full employment. So the Federal Reserve can directly change short interest rates. They control that. They have the exact lever to do that, and that's why you're getting 0% interest on your checking account. They're trying to make it easier for people to borrow and create jobs and get the economy going. The other thing that they do is they try and lower long-term rates, and they can do that indirectly. They're doing that by trying to buy bonds and make long-term interest rates go down. Janet Yellen now has the job, the first job 2 days after she gets sworn in. She has to go in front of Congress and explain to them while she's trying to raise interest rates while the economy is average, or depending on where you live, way below average. So she's gonna have to give testimony and explain how she's thinking, try and tell them where she stands. What we're going to be watching in the markets is she giving us any guidance of what she's going to do in the future? And secondly, this is the first time we had a chance to see her on her feet. So what is she thinking about? How does she react to criticism? Because certainly there will be a lot of people being nice to her. She's 70 years old. She's been on the Federal Reserve for a very long time. But there is a chance to be some political grandstanding. If you get a chance to score points to say you're hurting hardworking American families, you'll probably get some of that.
At some point during the congressional hearing, will she have to prove that Ben Bernanke's not under the table giving her the answers?
She has been the vice chairman for a very long time. Ben Bernanke might have just handed her the Olay. He might have been like Wile E. Coyote. He
hot potato
right before it hits the ground.
Here you go. Gotta go.
Here you go. Here's a stick of dynamite. I lit the fuse. Good luck. Bye-bye now.
Yeah. So we'll see how she handles it. She has a very difficult job right now. The economy is in transition, or the greatest thing you can say, it's in transition. This week we're going to get a better look. There's about 50 companies in the S&P 500 announcing their earnings and the results for the quarter. So maybe we're getting to the point where we're getting back to maybe fundamental analysis, how our business is really doing, instead of being so focused on Washington. We've got the fiscal, we've got the debt ceiling argument that has to get resolved here by the end of the month. Congress has to decide whether we're going to default on our debt or allow ourselves to borrow more.
What are you hearing on that? I think John Boehner's not up for a fight, and even those to the right of him in the House, they've told him, okay, no drama this time, let's just get it done.
I think the debt ceiling expired February 7th, which is last Friday. So we have enough, we can goof around and pay our bills till about the end of February. So we can not pay people or delay paying people, or, if you were getting a rebate in a tax refund, that's probably going to get delayed. I think you're right, John. There's not going to be a showdown. The question is what gets horse traded to make sure this doesn't happen.
Oh, hold on a second. Both Amy and I. What? Tax refunds delayed? Hold on a second.
Yeah, that's possible. The the Treasury Secretary Jacob Lew has to engineer how to make sure the government doesn't run out of money the next 30 days, because they can't borrow anymore. So what they do is they slow down the outlays. So the federal government pays out less money. They delay their payments as long as they can. So vendors or unsecured creditors like you, John, a guy that's expecting a tax refund, is going to get delayed.
Well, how long is a delay?
Well, until they get the debt ceiling figured out. What they'll do is slow pay it. They'll maybe make some payments, but if the longer we get into February, the longer the Treasury Secretary loses his ability to make payments. So
I don't want to be slow paid.
How much brown rice do you have on hand?
Well, yeah, we should be used to this in the state of Illinois. Illinois is a notorious slow payer. We have about 4 or 5, between $3 and $5 billion in bills outstanding that we slow pay every year.
Yeah, I normally get my tax return from the state in July.
Yeah, it's going to be the same story. But I think John's right. I mean, they'll figure it out. It's just a matter of what gets traded in and what gets given up to make sure that doesn't happen.
Brian, thank you for the expertise. It's always great having you on the program.
You're welcome. It's my pleasure.
Take care. Brian Battle, best in the business, Director of Trading for Performance Trust Capital Partners, here on the John and Amy Show, joining us on our Turnkey.pro answer line.